Hi, it's Yasser. Welcome back to the channel. The world has been going crazy. Countries in lockdown, flights are being cancelled, schools shut down, people are panicking. Every time there's a global crisis, the story is the same. Most people just panic. They're all over the place. So today I'll be going through how you can make millions from this pandemic and the oncoming recession and any recession in the future. By having the right finances in place, I was able to ride out the recession, make money on the stock market, and even grow my business. Smart people take advantage of this situation. That's why these strategies work. As good old Warren Buffett says, be fearful when people are greedy and greedy when people are fearful. Before implementing anything, be sure to speak to your financial advisor about your individual situation. Let's first break down what a market crash is and why it's happening. We have seen extraordinary growth in our economy since the 2008 crash. It's been up. But now recently, with disruptions in every industry, that's coming to an end and the economy is starting to stutter and we are going towards a recession. When companies are successful and doing well, it creates demand for more jobs. And when people have jobs, they can go out spending and consuming, causing other companies to do better, leading to a successful economy. Some people even start setting up companies of their own, some going into buying and letting, others go into construction, so on and so forth. However, in the service sector-led consumption economy that we have in the West, things are often perched quite delicately, meaning any shocks to the market can set off a chain of events which can take on a life of their own. We are currently seeing a chain of events with this pandemic like no other. It's a shock that has impacted the world's markets all at the same time. Of course, part of this is due to the fear caused by the media and the politicians. The mainstream media has also gone through its own disruption over the last few years, which means it's fighting harder to make money, which has led to the media sensationalizing and clickbaiting to attract attention and keep people glued to the television channels so they can keep making money from advertising. Anyway, I digress. On top of this, we have seen huge disruption in the supply chain over the last 12 months, which has impacted almost all industries, offices, small businesses, large businesses, even companies like Walmart, Apple, Amazon, who all depend on all these items coming from China. It creates a massive knock-on effect, which means you may have seen empty shelves or people even fighting over toilet paper. With all this uncertainty, investors start to panic and sell off stocks, which can cause a sell-off in the market, which further compounds the issue. If you take just one thing away from this video, it's that fear is the #1 enemy of the stock market. But you can be smart and train yourself to look for the opportunity. Don't succumb to paralysis by analysis. Even if it's not perfect, take action. With that said, let's dive in. Number 1 is build a safety fund. Reduce your spending and build a safety fund. Be really stingy, as you need to build up a safety fund of 3 to 5 months of living expenses. And you should only dip into this in an absolute emergency. Be really strict with yourself. This first step is hard, but it's really important, as once you've built up your safety fund, you feel really secure and you'll be able to think in a more clear manner. And you can also start thinking in a strategic manner about your finances, and it stops the noise of all the excess bills and the anxiety that comes with that. Fear won't affect you in the same way if your hours get cut, you lose your job, or you have a slow period in your business. Number 2 is index funds. Now you have your safety fund, you can afford to invest the extra money into an index fund. An index fund comprises of lots of different companies in the market, such as the S&P 500. The best thing about an index fund is if a couple of companies do not do well, you're not overexposed, as you've invested in a portfolio of different companies within that index. I predict the market will be worth a lot more money a year from now, especially if things start to improve with the current situation. The market will bounce back dramatically. I wouldn't recommend this strategy to anyone who isn't looking to invest over a 4 to 5 year period at least. As I said, one of the most popular index funds is called the S&P 500. This is comprised of the 500 biggest companies in the USA, like Apple, Amazon, and Microsoft. The amazing thing is, buying and holding this fund for over a 20-year period has never lost anyone money. I repeat, over a 20-year period, it has never produced a negative result. In the past, I've used Vanguard index funds. You can jump on their website, open an account, Pick your own risk tolerance. Don't be put off by the jargon and the big financial words, and start investing consistently. And if you can automate it, even better. Everyone has to start somewhere. Do your research. See what fund is best for you. Everyone has to start somewhere. Do your research. See what funds are best for your risk tolerance. You can use Google, watch YouTube videos about investing, and start taking an active interest in growing your finances. Start investing consistently, and the slow and steady way is probably the best way. And like I said before, if you can automate it and take the friction out of investing, then even better. When I first started investing, I started to read a lot, and I realized for me, the best thing to do was taking that friction and the thought process out of investing. Once I chose where I wanted my money to go, I put up a direct debit, and that sent money directly out of my account. I set up a recurring investment order, and that sent money straight out of my bank account to the fund that I wanted. The best time to plant a tree was last year. The second best time is now. Get going. The main thing is don't panic, do your research and take action. Everyone starts somewhere. Honestly, if you invest in a fund and leave it alone long enough, you will make a profit. Obviously, I don't have time to go through all my investing strategies in this one video, but if you're interested in that kind of content and some of my other ideas, do subscribe and like. Number 3, selling shovels. Now there are two types of entrepreneurs. The first is a gold miner. These are the ones that go out and search for the money. They make moves, they work hard. Sometimes they make a loss, but other times they're spectacularly successful. This is the type of entrepreneur I am. I look for gaps in the market, try to find those successful products that I can sell. Over recent years, I've made money off fidget spinners, beauty products, and even slime. I love spotting a trend and sourcing items. I'm always on the lookout for that killer product to bring to market. The second type of entrepreneur is a shovel seller. These are the type of entrepreneurs that are selling the tools that the miners need to make money. It doesn't matter if the miner finds gold or not, because everyone is looking for it and they need the tools to do that. And as the current crisis is causing the market and demand to shift, there are opportunities to do just that. Just think about it, this coronavirus is causing people to have to self-isolate, meaning the demand for technology which allows people to work from home has skyrocketed. Even schools are turning to online services to teach children. Markets and industries have changed. Jeff Bezos of Amazon has almost doubled his net worth in this pandemic due to his Amazon FBA business meant that he never had the supply issues that other businesses had. So as soon as you can start selling products which allows businesses to continue to mine for money despite any crisis, you're on to a winner. Number 4, invest in real estate. If you have extra cash, you should invest in real estate. Not only can it be more tax efficient, but it also helps to compound your wealth. I've studied Forbes Rich List and the UK Rich List, and I've found that most of the wealthy have made money in property. This is a long-term strategy, so I wouldn't worry if the property loses value for the first 6 months or a year. Due to low interest rate environment and quantitative easing, as well as a growing population, demand for real estate will keep going up. And by buying in a recession, when others are paralyzed by fear, you will see fantastic returns over 10 to 15 years. The trick is obviously to buy low. In a recession, if you have ready cash and can complete the deal quickly, you'll have fewer competing bidders, so then can negotiate the best price. Remember, the key to a good negotiation is take the emotion out of it and always be ready to walk away. Number 5 is buying individual stocks. This is probably the most risky option. There is potential to lose a lot of money here. However, if you can forecast that a stock value will go up higher and higher, there are huge rewards to be had. I have made a lot of money buying shares in businesses and industries that I know, such as ASOS, Netflix and Ocado. The general rule is if there's growing demand for what the company offers and they're the best at executing and they are focused on growing their brand and the management team is great at what they do, then that company ought to be a candidate for investment. However, when your mate who's never been into stocks or the stock market starts talking about either or even cryptocurrencies, then you know you're in bubble territory. It could be a good barometer of where the market lies. So remember, huge disruptions to the economy can cause massive pain, but also bring in huge opportunities if you can stay wide in and keep your head whilst others are losing theirs. Remember, on the whole, things always bounce back. This is your chance. Keep learning, keep evaluating, and take action. If you have any questions, leave them in the comment box below. And if you're interested in making money, passive income, finance, stocks, business, entrepreneurship, do subscribe.